$66 billion. That is what Cerebras was valued at when it opened on NASDAQ at $350 per share, the largest pure-play AI chip IPO ever. How does a single-chip wafer bet, called impossible for more than a decade, become that number? The answer is verifiable. In 2015, Andrew Feldman and 4 co-founders refused the industry playbook of small chips clustered by the thousands. They built one chip the size of an entire silicon wafer, 46,225 square millimeters of compute on a single die. TSMC had never produced at that scale. Yield engineers called it nightmare math. The mechanism is not the science. It is the discipline that survived 7 years of unproven yields, a withdrawn 2024 IPO tied to G42 customer concentration, and just $24.6 million in 2022 revenue, before raising $5.55 billion at the public debut. 5 co-founders. 1 technically audacious idea, and absolutely no guarantee the silicon would ever cooperate. Andrew Feldman, Gary Lauterbach, Michael James, Sean Lai, and Jean-Philippe Fricker weren't attacking a small problem. They had identified something structural, a compounding inefficiency, baked into how the entire AI industry processed workloads. As neural networks scaled, the communication overhead between discrete chips in a cluster didn't stay flat. It grew. Every additional GPU added latency, consumed energy, and introduced coordination cost that arithmetic improvements alone couldn't recover. The founders weren't optimizing around that bottleneck. They were eliminating it entirely. But conviction doesn't pay salaries, and the market wasn't in a rush to validate them. Years after founding, Cerebras was still generating early-stage revenue, a fraction of what a capital-intensive hardware company betting on unproven wafer-scale manufacturing yields would need. That number represents something specific: years of holding a thesis that the industry hadn't yet accepted. Then came the first attempt at a public exit. In 2024, Cerebras filed for an IPO, only to withdraw it the following year. Regulators raised concerns over customer concentration tied to UAE-based partner G42. The path forward closed before it opened. That withdrawal mattered. It meant the team had to rebuild its investor narrative, diversify its revenue base, and reapproach markets on stronger footing. A decade would ultimately separate founding from successful debut. The founding vision was clear. But a vision without a working chip is just a pitch deck. The real question is what happened in the lab, and whether the wafer-scale architecture actually delivered what the founders promised. Here is what Cerebras actually built. Conventional chip design cuts a silicon wafer into dozens of small dies, then strings them together with interconnects. Every signal that crosses between chips burns time and energy. Cerebras eliminated the crossing entirely. One wafer, one chip. All compute, memory, and bandwidth on a single unified substrate, 46,225 square millimeters, with no inter-chip communication penalties at all. The first-generation wafer-scale engine proved the concept, delivering sparsity-enabled speedups from 2.65x to approximately 26.5x in 16-bit petaflops. Memory was the constraint, just 18 gigabytes of on-chip SRAM. Engineering execution continued. WSE2 arrived in 2021, built on TSMC's 7-nanometer process, with higher transistor density, expanded compute, and cluster deployments scaling to 192 nodes. Then WSE3 redefined the category entirely. The die measures 46,225 square millimeters, 58 times the surface area of NVIDIA's B200. It houses approximately 4 trillion transistors, 900,000 AYI compute cores, and 44 gigabytes of on-chip SRAM. The on-chip memory bandwidth reaches up to 21 petabytes per second, 2,625 times the memory bandwidth of NVIDIA's B200. On open-source large language model inference, Cerebras claims up to 15 times faster throughput than GPU-based alternatives. But here is the structural barrier competitors face. Building yield-viable chips at wafer scale requires solving defect management at a dimension that conventional chip design never encounters. The problem doesn't get easier with effort. It gets harder to copy with time. Cerebras had built the chip. The harder question is whether the architecture itself creates compounding advantages, or whether hardware excellence alone is enough to build a lasting moat. An engineering advantage is not a moat. A moat requires that the advantage compounds structurally, relentlessly, against every competitor move. Cerebras built something rarer, an architecture that gets relatively better as the market demands more. Here is the mechanism. As large language models scale, their memory bandwidth requirements scale with them. Each new model generation widens the performance gap between on-chip SRAM and off-chip memory hierarchies. Think of it like a river widening after a storm. Every competitor adding more GPUs is just stacking sandbags around the very bottleneck Cerebras, eliminated by design. In mid-2023, that structural edge began translating into commercial reality. Early large-scale orders for multi-site AI deployments. Wafer-scale processing moved from laboratory demonstration to infrastructure contract. That's not a purchase order. That's a bet on a new topology for the entire AI stack. The inference positioning sharpened the blade further. NVIDIA built its dominance across the full AI compute stack. Cerebras targeted inference, the latency-sensitive serving of model outputs at production scale, where memory bandwidth translates directly into query throughput and cost per token. OpenAI, the world's highest volume inference operator, reportedly committed over $20 billion in compute. AWS joined as a strategic channel partner for cloud-based distribution. Two of the most compute-hungry organizations on Earth, both choosing the same architecture. That's not coincidence, that's convergence. Concerns over customer concentration forced a reckoning. But instead of exposing fragility, it revealed something counterintuitive. Cerebras diversified aggressively. The partnerships broadened. The moat grew more durable, precisely because it had to. The architecture was real. The customers were real. But a moat only matters if revenue scales with it. What did the financial trajectory actually look like? And what did the market see when it priced this company at $66 billion on a single trading day? The numbers tell the compounding story precisely. From $24.6 million in revenue in 2022, Cerebras climbs to $290.3 million, then to $510 million in 2025, a 76% year-over-year growth rate on a nine-figure base. More striking, alongside that acceleration, the company posts $88 million in net income, swinging from a loss the prior year. High growth momentum and demonstrated profitability simultaneously in one of the most capital-intensive categories in semiconductors. That combination is what institutional investors rarely encounter. Hardware companies typically sacrifice margin to chase growth, or sacrifice growth to defend margin. Cerebras delivers both and adds a third signal: diversification. The prior concentration in G42 had raised concerns ahead of the IPO. By 2026, AWS and OpenAI anchor a fundamentally different customer structure. When Cerebras prices 30 million shares at $185, already above the $150 to $160 indicative range, the oversubscription level communicates something specific. Orders exceed available supply by more than 20 times. Lead underwriters Morgan Stanley, Citigroup, Barclays, and UBS aren't managing demand. They're rationing it. The stock opens at $350 and peaks at $386. It settles at $311.07, up 68%, implying a market capitalization around $66 billion. Proceeds reach $5.55 billion, with potential to extend to $6.38 billion upon full underwriter option exercise. The largest pure-play AI chip IPO in history. The largest U.S. tech offering since ARM's 2023 debut. The $66 billion valuation is the scoreboard. But scoreboards describe what happened, not what caused it. Strip out the market noise, and there is a replicable strategic framework underneath, one that applies well beyond AI semiconductors. 5 stages. 1 decade. A framework worth dissecting. Stage 1. Cerebras didn't identify a feature gap. It identified a structural tax. Inter-chip communication wasn't an inconvenience. It was a penalty that compounded with every generation of model complexity. That distinction is critical. Feature gaps get competed away. Compounding taxes are gravity. They only get heavier. Every rival who didn't solve the problem at the root paid more each year to work around it. Stage 2. Eliminate the inefficiency architecturally, not operationally. Don't route around the bottleneck, remove it from the physics. Stage 3. Accept the proof window. 11 years from founding to IPO. That patience requirement isn't incidental. It's the selection mechanism. It's the velvet rope that only admits teams with sufficient conviction and sufficient capital discipline to survive the silence between breakthroughs. Stage 4. Convert the first large deployment into a reference moat, then treat concentration risk as a forcing function. The 2024 withdrawal nearly ended the story. Instead, it triggered 18 months of deliberate diversification. AWS, OpenAI, a fundamentally different customer architecture that made the $66 billion debut not just possible, but inevitable on its own terms. Stage 5 is timing. Revenue at $510 million. Net income at $88 million. Ecosystem anchors confirmed. The $5.55 billion raise lands when all three signals align simultaneously, not before, not after. Now, the counterintuitive lesson. The manufacturing complexity that made wafer-scale integration appear unviable was never the cost, it was the barrier. Cerebras built its moat on the very difficulty that kept everyone else out. The thing that looks like a weakness on a pitch deck becomes a fortress once you're on the other side of it. This playbook doesn't live only in semiconductors. Pharmaceutical manufacturing, satellite infrastructure, grid-scale energy storage. Any capital-intensive industry with a bottleneck that compounds at scale contains these same preconditions. The question is whether a founding team can hold conviction long enough to reach the compounding phase before capital runs dry. Cerebras built one of the most durable hardware moats in a generation. But NVIDIA's manufacturing scale, software ecosystem, and customer lock-in represent a compounding advantage of equal depth. So the real question the next decade must answer is this. Can two architectural ecosystems genuinely coexist inside AI infrastructure, or does the market, as it always has, eventually converge on one?
Learn the next winning strategy.